Now they're getting ready to pass it, and the lawmakers in the House are ready to move to vote on a stopgap spending bill and to prevent a government shutdown. But states have been actually talking about tax cutting sprees, and now a proposed Pennsylvania tax break could result in big tax cuts. If the tax breaks happen, this will not be good. It's fueled by surging revenues. States have been slashing taxes for individuals and businesses for the past 3 years. But tax cuts are expected to come to an end in some states in the fiscal year. Some 25 states have cut individual income tax rates since 2021. And the lawmakers in many states have been approving tax cuts aiming to help residents financially. New property and rent relief rebate checks are going to be sent out, and these payments are worth billions of dollars and will equal hundreds of dollars for many people. It's fueled by surging revenue. States have been slashing tax for individuals and businesses for the past 3 years. But tax cuts are expected to come to an end in some states in the fiscal year. Some 25 states have cut individual income tax rates since 2021. It includes 22 states that reduced their top marginal rates. In 2023 alone, at least 8 states approved rate reductions. And Arkansas is trimming its top individual income tax rate to 4.7% after reducing it from 5.5%. Aside from individual income tax cuts, states have proposed rebate checks for their residents. Last year, 17 states issued inflation relief payments as well. And now, if you're a Massachusetts resident, income tax refunds were available to you if you paid personal income taxes and filed your return by October 17. If you file your state return by October 17, you should be able to get your stimulus check back. Nearly $100 million in rebates will be sent out to residents across the Commonwealth of Pennsylvania. Starting today, over 4 million older homeowners, renters, and people with disabilities will be issued rebates on rent and property taxes paid in 2022. According to a release, the rebates will be allocated to eligible Pennsylvanians who submitted an application through the property tax and rent rebate program. Applicants who submit their bank account information on the application forms will receive the rebate through direct deposit. And those who request a paper check to be mailed should expect to receive the payment in the mail too. But after the initial distribution of rebates in early July, rebates will be distributed as claims are received and processed. Recently, a Pennsylvania governor called for a major expansion for the relief program, which provided a lifeline for Pennsylvania renters and homeowners. Under his proposal, the maximum standard rebate would increase from $650 to $1,000, while the income limit for renters and homeowners would be made equal and both increased to $45,000. But these income limits would also be tied to the cost of living moving forward, which means people who receive a rebate won't have to worry about losing their eligibility through no fault of their own. Ultimately, the proposal would result in nearly 175,000 additional Pennsylvanians qualifying for a rent rebate. Hoping to attract new residents, the governor has also proposed new tax break. The groups are asking the court to forgive and declare the forbearance credit policy as unlawful, set it aside, and block any cancellation of student loans based on it. In the first round of relief legislation, Congress said months in which borrowers benefited from the payment pause would count toward loan forgiveness for public workers. And roughly half of the more than $1 trillion in outstanding loans have been made directly by the federal government and being repaid through one of the 4 income-driven payment plans. The plan is capping monthly payments at a given percentage of earnings and with the promise that the balance will be forgiven after 25 years of payments. But a 2022 Government Accountability Office found that the Education Department did not accurately track the payments until a decade after the first income-driven plan was actually implemented. This is the Institute, and they say that $39 billion in debt cancellation is only a fraction of the true cost of a Biden proposed plan, assuming the per borrower cost of cancellation remains the same. Now, for $39 billion in debt cancellation, it's only a fraction of the true cost of Biden's proposed plan. Assuming the per borrower cost of cancellation remains unchanged, the groups estimate that the adjustment program could cost $175 billion in foregone payments and interest. We have some major news. There are upcoming changes to Social Security, and it may take effect sooner than we expected. As Social Security is adjusted on an annual basis, lawmakers are working together to improve the program. On one hand, bigger monthly payouts may arrive for many beneficiaries, but a certain group of people could see their tax liability increase. For over 49 million retired workers who depend on Social Security benefits, the program is a vital financial lifeline that helps cover their monthly expenses. This retirement program has a significant impact, lifting more than 20 million people out of poverty. It includes 15 million individuals aged 65 and above. But Social Security is not a static system. It continuously adapts to changes in the U.S. inflation rate, life expectancy, and other relevant factors. Although specific changes won't be announced by the SSA until October, there are several changes that will take effect in 2024. The most anticipated change is the cost of living adjustment, which is an annual increase intended to keep the pace with the rising cost of living. Due to high inflation, though, people are having questions about it. In 2023, beneficiaries reached the highest COLA in 41 years, but the COLA for 2024 is expected to be more modest. The nonpartisan senior advocacy group, the Senior Citizens League, estimated that the COLA for 2024 would be 3%. For the average retired worker, though, receiving $1,900 would mean an additional $55 per month next year. Unfortunately, though, the purchasing power of Social Security benefits have been declining regularly since the start of the century, and any increase actually won't even adequately address the estimated loss in purchasing power that is experienced by seniors since 2000. Another change for the upcoming year involves high-earning workers who will see an increase in payroll taxes due to a rise in the maximum taxable earnings cap. The payroll tax contributes about 90% of the program's revenue, and only about 6% of workers reach the maximum taxable earnings cap a year. Additionally, high earners collect Social Security benefits. They may experience a large monthly payout, as the maximum monthly benefit amount at a full retirement age is expected to rise in 2024. To qualify for the maximum Social Security benefit, you must meet 3 criteria. You must be the retirement age of full, work at least 35 years, and reach or surpass the maximum taxable earnings cap at all 35 years used in calculation.
I recognize the gentleman from New York, Mr. Jacobs, for 5 minutes.
Thank you very much, and thank you to all the panelists and Speaker Gingrich for being here today. This is a very critical issue for the future of our nation and our young people. I served for over 7 years on the Buffalo School Board, so kind of a lot of my tone here will be with that experience, but certainly it highlighted for me the significance of what you're talking about today. I can't recall the exact statistics, but I do remember our kindergartners and our pre-K kids coming in with a significant number of them already needing remedial help because of the fact that they had oral language deficiencies and the other basic building blocks that are required for them to be able to learn to read. And so this is a very